Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is June 26, 2023. I'm going to go over your three threes for the week. I'm going to go over our top 10 asset classes, their performance, and how we are positioned on a short-term and intermediate-term basis. Then I'm going to look at the equity markets and the support and resistance zones on a short-term basis. Then I'm going to go over our top three market movers for the week. So let's jump on in.
Okay, let's go over the top 10 major asset classes, their performance, and how we are positioning on the short-term and intermediate-term basis. And it was a different week this week. After 5 straight up weeks for the S&P 500, we finally had a down week, and it really affected the small cap and the international equities. Even gold and commodities were down. The S&P 500 and NASDAQ were almost down about the same. A lot of that was those tech companies, that top 7, 8, 9 tech companies are still kind of holding up this market, and we'll see if those kind of roll over here after the next couple weeks heading into the second quarter earnings. But we did have some things turn bearish on the short-term basis. Again, this is less than 3 weeks, and we did have the bonds turn bullish. So some very interesting things happening on the short-term basis we'll kind of see. But if you zoom out for the intermediate-term basis, which is less than 3 months, no real changes. We're still fairly bullish for the equity markets, even for the bond markets, and the US dollar still bearish on real estate and commodities. Gold is kind of on that neutral side. It's kind of waiting to see what happens with second quarter earnings to see if we get some buyers back in there to keep it on the bullish side, or if it turns bearish and we're off to the races on equities and they start liquidating gold. All right, let's go over the equities on a short-term basis and our support and resistance zones for the S&P 500. And if you remember right, again, we were buying here at the end of March and have had a nice little run, 9.5, even after a pullback last week. But let's talk about the resistance zone and support zones. We got up into this very large resistance zone, about 4240 to 45, almost 4500, and we since got up there and started to sell off. My guess is, like I said last week, we'll probably come down here eventually and test this 4200 zone again to make sure that it is supports, and that'll lead probably right into the second quarter earnings here over the next 2 to 3 weeks. And we'll see where we go from here. And if the earnings come in pretty well, we might see that bounce. And if they don't, and if they start projecting not good news moving forward, we could start to falter and possibly go back and test this other support zone. So we shall see. So keep a close eye on those earnings reports coming up. All right, let's go over the top 3 market movers for this week, Tuesday and Thursday. We have housing data. We have the Case-Shiller Home Price Index coming out for April. And right now that's projected to have risen 0.8 for April, and it rebounded also in March. And on Tuesday of this week, we get new home sales, and pending home sales for May is on Thursday. And just a little caveat here, if you've got an interest rate at 4% or lower, most likely you are holding on to that and you're not necessarily going to be selling your house, which means that the new home sales, I think, are going to start to see a rise coming off a year of negative numbers. So anticipate that number looking a little bit better than pending home sales. A lot of that has to do with interest rates, and if you don't have to sell, you're most likely not going to. Also on Thursday, we have the final first quarter GDP reading, and the last estimate was revised up 0.2 to 1.3. We shall see if that number remains or if they add to it or subtract to it, but that'll be the final read. But the more important one is the second quarter. There's a huge disparity between those two. We've got some that are coming in positive and we got some coming in negative. I will go over that in our chart of the week this week. On Friday, we have the Personal Consumption Expenditure Index for May, and that's the Fed's preferred inflation gauge. And right now they're projected to rise in 0.2. Following a 0.4 increase in April. So that gets us to about 4.1 on an annual year-over-year basis. That's coming down from 4.4. Well, that's the positive that we're coming down, but we're also going to be getting rid of next month a very low number. So we've got to watch that, because most likely this could be the bottom. Even though the Fed wants us to go to 2, we could see it even tick up next month, or actually the next couple months, which will keep the Fed hawkish. So keep an eye on that also next week. All right, so thank you for joining us. Our next update is Monday, July 3rd. We will be closed. The markets will be closed on July 4th, but we'll get an update right before that. So we'll see everybody next week. So have a great week trading.